Hi, I'm Peter Goodson, and I'm a professor at the Berkeley Haas Business School. And I'm a former partner in the early stage days of Clayton, Dubilier & Rice, the first operating-centric firm in the United States. I think we were the fourth firm to create a billion-dollar fund. I've come to Asia to talk about my impressions after spending a great deal of time in Asia, both as an investor and friend of many of the GPs here, about the outlook here and what I see. I'd like to start off by saying in my talk that the days of low-hanging fruit, in my opinion, are quickly coming to a close. Growth alone, selection alone, I think are fairly almost commodity. Everyone says they do it. Every GP I've talked to here, of course, has a great value added. I think there's going to be a shift in that, and part of that reason has to do, of course, with the sophisticated analytical tools. Firms like Duff and Phelps have been very creative in putting together analytical skill sets to look at value creation. For instance, in Clayton, Dubilier & Rice, over 89% of their returns are due to EBITDA expansion, both through margin and through growth programs that they institute in their businesses, companies like Hertz, Home Depot, and of course most of you know the many names that are involved in there. Now, not everybody can afford to have, or does Jack Walsh want to be a partner in every firm that exists in Southeast Asia, nor can anyone possibly imagine with a $200 million fund that they would have a capstone-sized organization with 100 professionals, all with great McKinsey and Bain type backgrounds. So one of the ideas that we've been exploring with Mekong Capital and Tata PE Capital and several of the other Asian companies is what we call a CEO coaching model and a board of director model where chief executives and functional experts take a position in the firm, will have part of the carry, and in addition will really be paid on a results-oriented basis to work with the companies they work with. We've enjoyed tremendous success in the first few models, and the idea of adding, if you will, value added and having attributable value added, I think is going to be the LP threshold, not just a nice thing to do in the next 20 years. As more firms join Perac and Duff and Phelps in this regard, I think more and more LPs will sensibly turn to look at what value is provided. If you think about it this way, are we really paying a GP to watch their companies grow? Or are we paying a GP to add some value? In the simplest of context, that's the way I would look at it. If I want to play the growth story, in most markets, I don't have to pay 2 and 20, the typical fee and carried interest combination that our firms ask. I could go buy in the public market for 1/8 of a point. So I think the real question will be in the next 10 years as we look at where Asia goes is more sophisticated analytical tools, a thinning of the process that has grown so fast. It's increased over 10 times since 2006. The concentration in the large firms' hands has been enormous. Over 50% are in 10 funds of the money that was raised in the last 5 years. In 2013 alone, close to 88% has gone into concentration. So the small local provider that has, I think, the greater opportunity for higher returns can be supplemented with these plans and programs. It doesn't work in a formula basis. You have to be creative, I think, in finding the best solution for Vietnam, the best solution for Indonesia, and the other areas in the region. And you have to be very careful about how you align your interests with the entrepreneurs. A great deal can be said about growth capital. I find that to be an excuse. You need a compelling case to cause managers to want to change something. As one of our presidents once said, and I think it's a great quote, if you want to make enemies, try and change something. Well, you better have a compelling case that's at the Bain Plus level if you're going to go into a company and suggest that you're going to improve their margins or accelerate their growth. I think it's a tremendous opportunity here. I wouldn't be investing my time in looking at building a series of cases to teach a course in private equity. I think it's a tremendous opportunity, but I think the criteria on which firms are going to judge is going to change. And it'll either be adoption or extinction in terms of the evolution in Asia. Thank you.